Hey, welcome back to YT Finance, and today we are talking about Palantir, PLTR stock, and why Palantir is such a great long-term stock to own. Next, we will discuss Fulgent Genetics, aka FLGT stock, and why it could be a great way to diversify your stock portfolio with new and exciting technologies. And lastly, we will touch on Muscle Maker, also known as Grill stock, GRIL, which is a penny stock that could have explosive growth potential. Like this video right now for PLTR stock, FLGT stock, and GRIL stock, and let's make you some free money with Webull. Webull is a free brokerage app where you can buy and sell stocks, options, and cryptocurrencies, but right now you can get 2 free stocks with Webull. You can get the first free stock, which can be worth anywhere from $2 to $250 for just creating an account, and you can get a second free stock, which can be worth up to $1,600 if you invest $100 or more on your first deposit. You will have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google or Procter & Gamble. To get this offer, just press on the link in my description box down below, but do it quickly because this offer will not last forever. And without further ado, let's get into today's stories. Palantir Technologies, ticker symbol PLTR, has been connected to the finding of Osama bin Laden, the conviction of Bernie Madoff, and it has aided in ICE raids. So PLTR stock has generated a lot of investor hype and interest, but is it really worth adding to a long-term portfolio? Well, let's dive into PLTR stock and find out. Like the majority of software companies, Palantir was created in Silicon Valley, but it actually opposes many Silicon Valley type companies like Facebook, Amazon, and Alphabet, who is the parent company of Google, and that is because Palantir values data protection and an individual's right to data privacy, unlike the previously mentioned companies where your data is collected and sold. Now, Palantir definitely still has access to your data, however, PLTR prides itself on keeping that type of information and data private only to them and you. On top of having good ethics and policies, Palantir has also had increasing revenue growth for 3 years straight. PLTR has already a 45% year-over-year revenue growth in the first quarter of 2021, and this growth is anticipated to continue for the next 5 years. Not to mention that Palantir's addressable market is worth $119 billion yearly, while Palantir itself has only made $1 billion of revenue in 2020, so they have loads of space and a plethora of time to continue to grow. PLTR also has a high customer retention rate because its top 20 customers have been with Palantir for an average of 6.6 years, which is outstanding. On top of that, Palantir is also getting a lot of attention because of all of the big names and contracts they are landing with the likes of IBM and Amazon and many more. Palantir even beat out the likes of Raytheon because they outbidded them on a 10-year contract with the United States military, which is absolutely huge. Due to all of these great signs, I am buying more PLTR stocks. I think it has amazing long-term potential, and I will not be selling it anytime soon. Next up, we have Fulgent Genetics, ticker symbol FLGT, which was a huge winner last year because of the ongoing illness. Because of its core genetic testing business, it made loads of money. Now, FLGT stock is very volatile, it's relatively new, it's been doing great lately, but can this be sustained? Is this growth sustainable? Also, I have a couple of drawbacks for this stock, but overall, if you like volatility and you don't mind it, then this could be a good stock to own. Fulgent Genetics went from making around $32.5 million to making $422 million last year, when originally it was projected and predicted to only make around $125 million. FLGT's sales also increased 3,400%, and it's also anticipated to grow another 90% this year. It also had a massive pullback recently, so this is an overreaction play that will also diversify your portfolio, but please watch out for the volatility of FLGT stock. Now, the bigger question that I'm concerned about is, can this growth be sustained, or was all of this growth temporary because of the illness? Now, I think it's set to continue to grow because it has landed deals with federal agencies, school systems, sports leagues, cruise lines, and many others. The company also is looking to expand by potentially acquiring another company, and their market is supposed to grow to $23 billion by 2027. Now, the next stock we will touch on is Muscle Maker stock, aka GRIL stock. It's a restaurant business chain that sells protein-based meals, so think flavorful but also healthy. The unique thing about Muscle Maker is that they are adopting the use of ghost kitchens, which are restaurants that don't have seating and they only deliver, and this has exploded in popularity. It reduces the many costs of business, like rent, because the space is smaller. They are much easier and cheaper to run, and they are much easier to get started. A regular restaurant costs around $250,000 to open up, while a ghost kitchen only costs around $20,000 to get going, so it's a huge difference. Because Muscle Maker is focusing so much on putting up their ghost kitchens, they are going to target universities, army bases, and many other high traffic areas. And because they are so cheap to make, it's going to be really easy for them to get started and for them to pop up many different ghost kitchens all around the United States. Now, clearly this is a speculative penny stock, so this probably won't be the next Shake Shack or Chipotle stock, but I am saying that because ghost kitchens cost less to keep running and to open up in general, that will allow Muscle Maker to lower expenses and to keep more of their profits, thus making GRIL stock go up. Right now, Muscle Maker has 33 locations today, but because of ghost kitchens, in a few years, they are estimating to have over 200 locations, which will expand their profit margins, and more importantly, their costs will be lowered exponentially because of these ghost kitchens. The prediction is that GRIL stock could do well, and that Muscle Maker will make around $5 million in net profits over the course of the next couple of years, giving it around a $125 million market cap. Now, GRIL stock is not the best next thing, but you should put it on a watch list and at least keep an eye on the company. Even if the company had average returns, they still could be onto something because they can expand relatively cheaply. However, please be aware that anyone can copy this business model, where only their food would be able to separate them from a competitor. Because basically anyone can use ghost kitchens. Anyway, a quick summary. Palantir Pltr stock, definitely a buy. FLGT stock would depend on your stomach for volatility and risk. And lastly, for a penny stock, I would just say put it on your watch list. Anyway, that's all I have for you all today. Don't forget to leave a like, comment, and subscribe, and I will see all of you in the next YT video.